the only week.
Oh.
They give me.
So, I'd like to open this meeting of the EDC at the present time. I'll ask Maria to do the roll call.
Sherry Way,
Present.
James Ellis,
Here.
Archie McKee is absent, Melissa Mills,
Here.
Nate Manette,
Here.
Clyde Rabideau,
Here.
Nick Russell,
Here.
also present, Jeremy Evans, Maria Bourgeois, Paul Ellis, are Pam Halloran and Mike Crowley present?
They will be, and when they come aboard, I'd like to make this point. When they come on, what we'll do is we'll interrupt at that point, regular procedure, and hear from them as to the audits. Want you to know we're going to be hearing the audits of all three of our agencies at that point. But I think it's a good thing for us to get it down on tape and to have a record of our audit. So.
Okay, so also present are Rachel Child and Justice Martin.
They're coming in now.
Thank you.
Or something, I don't know.
A motion to accept the agenda will be foregone at this time because we have other things that are going on, and it's going to be sort of a little bit nutsy today because of all the other things that are taking place.
There they are.
Excuse me. We now have our auditors online, and I'll interrupt the normal order of business to hear their reports. How are you, Pam?
I'm good. So sorry about that. I wouldn't work on my computer, so then we had to get another one going.
One of your kids wasn't around to help you.
Well, it's just really strange because I was just on a Zoom meeting and it was fine, but who knows?
Okay, welcome, Michael. Thank you. Just go ahead. We'll hear the reports of all three agencies while you're going through this now.
Okay, fantastic. Which one did you want us to start with?
Pam, if you wouldn't mind, let's start with the EDC since that one's the most involved.
Sure. All right.
One of the things, Pam and Mike, if you wouldn't mind.
Sorry, go ahead.
One of the areas that always provides a little bit of confusion is the GASB change with the lease, and if you could explain how things changed with that, even though it's been in place for over a year. And when we get to the IDA, if you could take a little bit more time explaining the entry for the New York State retirement system and how that impacts the financials.
Yeah, I missed the EDC. What did you want us to spend time on?
The way the leases are handled.
Oh, okay. For the okay, sure. Okay. So the EDC, it's actually falls under FASB standards, so it's not a government, it's a not-for-profit, and we file a 990. So that's a little different than the other two. It starts out with the independent auditor's report, and that gives you your report on the financial statements. And right there in the first paragraph, we tell you that it's an unmodified opinion. And so that's good news. That's the highest opinion that you can get. And then it tells you what the basis of our opinion was. There's a part there for management's responsibility for the financial statements, and that's for the preparation and fair presentation. And then the auditor's responsibility, and there's a whole bunch of things there. We always had these responsibilities, but now they're actually more detailed in the report. And then it gives a report on the summarized comparative information. So we're actually opining on the current year, but we're giving you the previous year as a comparative. You have other reporting requirements for Yellow Book. So that's another report at the end of the financials, and that is we look at your internal controls over financial reporting, and we also look at compliance with grants, laws, contracts, and regulations. But getting to the heart of it, we go to the statement of financial position. That would be on page 4 there. We're just going to go through some highlights. Your total assets are 2,550,000, and that's down about 162,000 from last year's 2.7 million. Our cash and equivalents are 1,220,000, and that's up just 4,000 from the previous year. Our grants and our contracts are receivable are 179,000, and that's down from last year. Last year it was 365,000, so that's a decrease of about 185,000. And what makes that up is we've got Energize, we've got strategic plan, we've got a DANK reimbursement in there. And then the previous year we had CARES money receivable, so that made up quite a portion of that. Our prepaid expenses are just about the same. They're 4,565. Last year they were 3,800. Our current portion of our loans are up 363,000, but our long-term portion, so that's due after 1 year, are down 577,000. So overall, the loans were down 214,000. The allowance is 282,000, and that's down 248,000 from the previous year. The previous year was 530,000. And the reason for that is you had two loans that were very questionable, and those were assessed previously in the allowance at 100%. And during the year, you wrote off these two loans. And so that goes off against the, oh, thank you. And that goes off against the allowance. And then Paul and Jeremy reassessed the allowance because your loans are less risky. So it's coming now to about 20% of the loans outstanding. Was there a question?
We're talking about the uncollected loans receivable?
Yes.
Yeah.
Yes.
Did we expense that on the P&L side?
Well, so you have an allowance, and that's a contra account to your loans receivable. So it was very large because we had those two loans that were pretty much not going to be collected, as well as you always assess, because you don't know what's going to happen. A business might be thriving now. So you always want to have an allowance that you're assessing. And so every year that allowance is adjusted against bad debt expense. So
it flows through to bad debt expense. I'm looking for the flow of that 300.
The flow of it decreased the allowance to 300, and then the allowance was reassessed. So the allowance, I actually have a note on this later on here.
So the actual flow is, as Pam's saying, is when you determine that the loans are not good, it goes against the allowance. So that doesn't affect your P&L at all, just reduces the allowance balance. And then you reassess your loans at the end of the year that you have that's available, and you bring your allowance back to what you think it should be based on your analysis, and any change there goes to bad debt expense. So the actual, yeah, so so that one does go to bad debt expense, but not when you're writing off loans that you have previously set up an allowance for, because back periods have already absorbed that bad debt expense way back when you set up the allowance for them.
And that's the idea. You want to keep that comparable. So it was
like a fund balance.
Adjusted.
Somewhat. Okay, we get it now.
Fantastic. Okay. So you issued $259,000 worth of new loans during the year, and then you received payments of $145,000. So last year we didn't issue any new loans. So and then again you wrote off the $329,000. Our capital assets are $21,000, and they're down $15,000 from last year. So that was $37,000 last year. Last year, we adopted the lease standard where we put a right of use asset on the books and also a liability. So that was for the Main Street lease. The leases have to meet a criteria in order to be based to go on the balance sheet. So as an asset and that's amortized over its life, and also the liability. So the only one that you have meeting that criteria is the Main Street lease. So
Real quick,
questions
I
on
would
that?
I would like to comment. I know last year I was on the loan committee, and I'm almost positive we did have a loan go out to a local business here, Prairie's Orchard.
And then we,
I
I don't know, you might have looked at the
Yes,
wrong
yeah.
line, but we
That
did
was
make
on
loans
the
last year.
June and
Okay.
She did. She said we had 159 in 2023. We didn't have any in 2022.
Oh, okay.
Oh, okay. Well, she said
Correct.
prior year, so a little
Yeah.
confusing.
Oh, prior
Yeah,
years as in 22,
Yeah,
sorry.
we're a year behind, so you guys are in 24, we're in 23. So we were
Alrighty.
looking at 22.
Pam, the only thing I'd like to comment right now, since you're talking about the leases, this was a regulation or guidance that came out of FASB, I believe, of a new way of accounting for leases. Before, it used to be simply, we write a check, it's lease expense, rent expense. Can't do that anymore. The association or whoever gives out the regulation says we have to do it to make it more understandable. And it's not.
Right, and the reason for this lease standard,
Well, before we had two kinds of leases, operating leases and capital leases. Capital leases were just like you financing something. So you'd buy it, put the asset on your books, and the lease would be recognized as a loan in essence. You just think of all the equipment you buy, your cars, you finance, you might lease and so on. But the lease standard said there's too much divergence in accounting. Companies that rent their space should be on the same. Should have the same balance sheet effect that companies who buy their buildings have, especially on long-term leases. So if you have a 30-year lease for a rental, and you're just writing off the rent payments over it, it's kind of puts your balance sheet at a different way of looking at it than one who purchases the building. So they decided that what it really you have is a right to use that asset, that building, if we're talking about a rental for a building for a period of time. And that asset could be worth a lot of money based on your lease. So you book the asset at the right to use asset as a asset, and you put on your balance sheet the corresponding liability for the payments, and you use either your loan rate that you have established with creditors, or you can use a loan rate that FASB has come up with, which is based on a tax-free rate, and you depreciate the building over the life of the lease, which is if it's less than the life of the asset, and then you just write your lease payments off. So it just made companies' balance sheets more comparative to be able to look at than what we had before. I know it went into a little bit too much there, but that's the reason.
yeah. All right. So we're good on that. We'll go into the liability section. Our total liabilities are 121,000, and that's down from last year's 169,000. That by about 48,000. Our accounts payable and accrued expenses were down 57,000, and that's really timing. So that is it for the balance sheet. We have net assets without donor restrictions only. There's no donor restrictions on our net assets. And we get on to statement of activities. Our total revenues are 657,000, and that's down from last year's 889,000 by about 231,000. Our grants and contract income were 458,000, and that's down from last year. It was 803,000, so decrease of 344,000. But remember, in the past we've had CARES money, so that's been expended, and when you expend it, you recognize it as income. Our fee income includes fees for administering the grants, and that's up 88,000. But I think last year some of this administering the grants was actually included in the revenue. So it's being recorded a little differently this year, and it was just a little too complicated to go pull it out. So just kind of taking those two numbers together and comparing. Our loan interest income was 63,000. It's the same as last year. It was, down $453. Our interest income is 39,000, and that's up $38,856 from last year. We just had 304, and that is mainly due to those treasury bills that you've been investing in. So the rate return on that has been very good. Our total expenses are 771,000, and so our revenues are down. We would also expect our expenses to be down, and it's down 550,000 from the prior year. Those expenses are broken out on the statement of functional expenses, page 6. We'll go through a few highlights there. Our salaries, wage, and fringe is 191,000, and that's down 45,000 from the previous year. Our consultant services are 52,000, and that's an increase of 16,000 from the prior year. Our marketing, sorry. Is there a question?
The most prevalent for the EDC, well, really the big one is Flat Leaf, who they do environmental work for all the grants that we give out.
Okay.
Yeah.
Good. Okay. So our marketing was down 33,000. It's at 16,000. Last year it was 49. Our legal fees were up 4,000, so they were 11,000 this year. And our office expenses were down 15,000. Our grants that we pay out to others were 361,000, and that was down 447,000 from last year's 808,000. So revenues were down, the expenses were down, and those grants that you receive are in your revenue, and then they're passed through, and they're in your grants paid to others. So our bad debt expense was down 38,000. So again, we had that write-off against the allowance. That is the statement of functional expenses. So we had a decrease in our net assets of 114,000. Last year, we had a decrease of 432,000. So it's a less of a decrease, 318,000 from the prior year. There is a cash flow statement, and that just shows exactly what happened with cash during the year. Our cash flows increased $4,112. Last year they were down $1,050,000. That is it for the statements. Now we go on to the notes. So the notes run from pages 8 to 18. Our note 1 is always our significant accounting policies. And if we adopted any new standards during the year, that would be indicated there. There weren't any standards that we had to adopt during this year. And then we go on to note 2 is liquidity and availability. And that shows what's available for general expenditure within the next 12 months. Then we get on to note 5, which is on pages 12 to 14, and those are the details of all of our loans that we have outstanding. So it gives you all the terms and where they stand. Note 6 is our capital assets. So that shows what happened during the year. We didn't buy anything this year. And so the decrease in our capital assets is really the depreciation, which happens every year. And that was about 15,000. Very similar to what that was the year before. Our note 8 on leases is on page 16. So that's showing you your future.
Pam, real quick, we got a question.
Sure.
Sure.
Do we have a line of credit with a bank?
No.
No. Okay.
No.
Okay, we got
Well, that's good because we don't have it disclosed. So
Have it in
that
there.
would be a problem.
Oh. It's normal to have. Yes.
Gosh. All right. So very good. And then note 9 is commitments and contingencies. So these are the loans that are, not exactly perfect. And then we also talk again about the 2 loans that we wrote off, the written off loans. Note, it's about it. Note 16 is on subsequent events. So if you had anything happen after the end of the year and until the financial statements are dated, which is March 8th in this case, that would be indicated there. And then you have another opinion in the back, which is it's what we call the yellow book opinion. So that is on your internal controls over financial reporting. And it describes there what would constitute a deficiency in internal control, and you'd measure that if it was material or significant. So we're able to, we don't have anything in there, so that's a good thing. And then there's a section on compliance with grants, laws, and contracts and regulations. So we didn't have any issues there. So very good. Any questions on that? Okay.
Okay, I guess we can move on to the IDA.
Sure. All right, the IDA is a government, so you have a couple more sections in there, and it's falling under Government Auditing Standards Board. And so a little bit different with our rules, and that is shown as 1 year only. The MD&A, however, has comparative. So this also starts out with our report on the financial statements, and your opinion is first, and you have an unmodified opinion. Again, highest opinion you can get. So very good. Then talks about the basis for our opinion, management's responsibility. The next page goes on to the auditor's responsibilities, which is quite a lot there. And there's a section on the next page about other matters. So we discuss required supplementary information. So there's some schedules that are required by GASB there. You have your management's discussion and analysis, which is prepared by management in the beginning. And then there's also 2 schedules related to the pension system at the end that we'll talk a little bit about. And then that also has a yellow book report. So that is our government reporting with government auditing standards. And we get in now to the management's discussion and analysis. And this is showing our financial highlights. It is giving you an overview of the financial statements. It's talking about swings, and it gives you comparative financial information condensed version. And then there's also factors bearing in the future. So your priorities for 2024 are at the end of that. That goes to page 11, I think. Really good reading if you want to read it through thoroughly later. So that gives you a good idea of the swings, but we're going to talk about the swings when we go through. So if we go to page 12, that is our first statement here, and it is our statement of net position. So our current assets are 664,000, and that's down from last year's 924,000 by 260,000. Our cash and equivalents are 87,000, and that's down 762,000 from last year. Last year was 850,000. But our treasury bills, which were not meeting the criteria to be cash equivalent, are shown on a separate line here. So those are 499,000. So you kind of have to take those together. And the reason considered cash equivalents is that has to be a maturity of 3 months or less. So that, I believe, matured in April, so it didn't fall into that. So that has its own line item. So together, if you look at those two, cash is down 263,000. There was, at the end of the year, there was also 50,000 that was held in escrow with an agent that you didn't have in your possession. So that was a deposit for a purchase of land. And we also have a corresponding liability there. So we're showing the cash and then the liability. But I understand that after year end, you sign that, it's now become yours and can be recognized as revenue. We have no receivable at year end. Last year we had a receivable due from the EDC. So the EDC subsidizes 50,000. And that was still due to be paid over at the end of last year. This year it was paid before the end of the year. We have prepaids were 27,000, up roughly 4,000 from last year. Our net building, land, and equipment was down 11,500. There was a $5,025 gain on the disposal of equipment and land. So you had a non-refundable deposit. So we were able to recognize that as that was pending as a sale on land. Last year, our pension was an asset of 43,000, and this year it's a liability of 108,000. So, and the year before that, it was a liability. So we went liability, asset, back to a liability. Our total assets are 1,301,000, and that's down 315,000 from last year. Last year it was 1.6 million. And then we have another thing called deferred outflows of resources, and those are 93,000. So they're down about 6,000 from last year. Last year it was 99,000. So that is it for the assets and deferred outflows of resources. And then for our liabilities, we have, they're 171,000, up about 148,000 from last year. Last year, they were about 23,000. Our pension liability is 108,000 last year. This was an asset of 43,000. So that was a swing of 151,000. And then also related to the pension.
Pardon me. What comprises our pension liability? Are we for the state or not?
The IDA,
Yes. Yeah.
for state retirement.
Okay, so what comprises our liability? Why is it something we pay along every month, every week? And how does it accumulate to $107,000 or 106?
Pam, you want me to take a stab at it?
Go ahead, you can take a stab at it. Go ahead.
Okay, so basically, if the retirement system had to shut down on December 31st, sometimes they are funded over 100%, sometimes they're underfunded. And basically what the state does is like in 2022, they were overfunded, so we wouldn't owe anything to make sure that all pension liabilities for our employees would be covered. This particular year, they weren't funded at 100%. They fell short. And basically, we get a report on the state controller's website for our ERS, and they identify what the shortfall is and what technically we would have to make up if the state shut down and had to pay out all pensions. We would have to pay a share of that to make sure that all pensions were paid. That's a layman's version of it. Pam and Mike might have a different opinion.
Oh, it was a good explanation. It's pretty involved, and there's some significant notes here. You want to?
Yeah, so basically what you described is kind of true. So there's a tremendous number of employers that are contributing into the ERS system. So yours is just your little chunk of that giant pension asset. And
If you go to page 24, you can see that.
you can see what your little chunk of that, 232 is it trillion, I think, or million, billion, 232 billion is the system. So an actuary does a study and figures out what the liability is at that point in time, and then there's a report on what the assets are worth, and what causes the switch from asset to liability is mostly dependent on what the market is doing. So if the market is up, we end up getting a pension asset most of the time. And when the market goes down, we tend to get a pension liability. And at this particular moment, we were looking at December 31st. And I think the market at that point was not as good as it had been. So that might have been the reason that you had a liability. So basically, you're at the mercy of what the pension plan gives us as the information to be able to give you the disclosure. But as far as running the agency goes, you get a bill once a year that tells you what you have to contribute to the system, and you send it in, and they give you, I believe they give you a little discount if
Right,
you send
if you
it in
pay
early.
it in December, so you pay it before
Yeah.
you get a little bit of a discount.
So pretty much we're on a pay-as-we-go basis, all figured out by what an actuary determines to be the liability. So we just are going to have these strange fluctuations depending on how the market is doing.
Right, and if you actually scroll up one page to page 23, so you see there at the bottom, it shows the current assumption is at 5.9%. If you had a 1% decrease, 4.9, your liability would be $260,703. And if you had a 1% increase, you would have an asset of $19,819. So that assumption is pretty driving for that.
Yeah, it just kind of gives you a sensitivity of a drop of 1% from the current or an increase of 1%, what that would do for you. So you can see that can change from an asset to a liability pretty easily.
Is the offset account a payroll expense?
Yes.
What's that?
The goes into the
benefits probably.
Benefits, yeah.
As opposed to
Payroll
just payroll,
and
it's
fringe,
payroll and fringe. It would be payroll and benefits.
Okay.
Yeah. All right. Very good. Okay, so pension liability was 108,000. Our deferred inflows of resources were down 8,000. Our net position is 1,215,000, and that's down 325,000 from last year. Last year it was 1,541,000. Our charges for services are 21,500. Down 257,000 from last year. So last year we had a lot of fees from bond issuance. We had Burke Solar, Covington 1 and 2, Church Street. So last year was a heavy year for that. Our total revenues were 109,000, and that was down 253,000 from the prior year. And that's primarily from service fees, as discussed, as we just talked about. And last year we had a gain on sale of land, 31,000. And then we also get that grant of 50,000, so that was the same as the prior year. This year we had the gain on the sale of property, which was that non-refundable deposit. Total costs were $434,654, and that's up from last year's cost of $308,000. And in there, our salaries were up $60,000, our benefits were up $43,000, and that does include your health insurance and pension. Our professional service contracts were up $4,000, and that's mainly in our legal area. Supplies and materials were up $11,000, and then other operating was up around $8,000. So our change in our net position was a decrease of $325,000. Last year we had an increase of $55,000. So that was a downward swing of $380,000 on that. Our cash flow statement, even though you're a government, you have a cash flow statement because you operate kind of as a business. You're a public authority. You're falling under those rules. We had a decrease in cash of $213,000. Last year was a decrease of $28,000. And that's it for the statements. We then get into our notes, and they go from pages 15 to 24. Again, note 1 is there a summary of significant accounting policies. If we adopted any new standards, we would indicate that there. It also talks about your capitalization threshold, and that's $2,500. Note 2 is on our related parties, and that's on page 19. And we're talking about the 3 entities being related. And then note 3 is our capital assets. So we did add another $13,950 in construction in progress. So we did have a restated beginning balance on our construction and projects. Something didn't quite make it into last year's construction. So you end up in the same, but it actually, we restated the beginning balance on that. So there's no change on the net assets for that. And then that also shows you your depreciation. So our net assets are $637,000. Note 4 is on that retirement plan. So the ERS pension system is pages 20 to 23. Well, it must be more than that because I had you go to page 24. What's note 5? Note 5 is our commitments and contingencies. You still do have that Brownville study out there. You're working with the DEC to try to reduce or waive the repayment requirements. So we did add that in there. Note 6 is on leases, operating leases, and then note 7 is on our capital leases. Well, the leases that are on the balance now, which we don't have any. We don't have any for this one. Sorry, I got confused with my entities. So you had the lease with the Franklin County building, but you were on a less than year to year on that. And then now you're not staying there. So that's also less than a year. So nothing there fell into that. Note 8 is on subsequent events. So we do say that you signed a contract for the sale of the Bombay plant, and that $50,000 deposit in escrow was transferred to you and it's not refundable. So we did have a restatement in the financial statements because in the past, pilot receipts and pilot payments were being included as revenue and expense. But if they kind of fell over into another year, like a payment wasn't made, there was a liability on there. And so that had to be removed. So that actually increased your net position by $35,000. So, and that is it for the notes. And then we get into the 2 statements on the pension system. So that is going to show eventually 10 years. So from the time it was implemented in 2015, in 2025, it'll have its full amount. So you can see what the the share of the pension or assets if it's in brackets, and there's only been the 1 year it was an asset, and you can see how much it's funded. So in 22, it was funded at 103.65%. And then the next schedule shows the your schedule of employer contributions. So, and what the percentage was on your covered payroll. So that's all based on what the covered payroll is. And then we have our yellow book opinion, which on our internal controls over financial reporting and our internal controls over our external compliance with grants, laws, and contracts. So if we had any issues there, there would be a schedule of findings and question costs, and we don't have any.
Good job.
Very good.
Good.
There were a couple of communication letters that I sent out this morning, and one just gives, and that they're all the exact same for the wording for the three organizations. It just says what our responsibilities, your responsibilities. If we'd had significant audit adjustments, we would let you know there, which we didn't. And then the other one, and it's just one page, it says there's no material weaknesses, which that's all we're allowed to say, but it's always a good thing when it's one page. So that is it.
Pam, I think due to the sake of time, I'll probably be able to handle the CDC when we get to the CDC meeting. We got a rather full agenda, and I've got a couple board members that need to leave. I think I'll be able to cover the CDC when we get to it.
Sure.
Unless you're done.
More activity than it's been in a lot of years. We're good.
Good.
All right. Well, thank you both.
Thank you. Sorry about the snafu.
I'll forward any, if there's any follow-up questions, I'll forward them on to you.
All right. Very good.
Great. Thank
Thank
you.
you.
Thank you.
Thank you. Let's see.
So I think next year we need to talk about a different format and presentation.
Okay, we're back to the agenda. Is there any additions, corrections to the agenda for the EDC? Hearing none, we'll assume that item has been taken care of. Public comment, EDC. We'll now go on to item number 4, approval of the previous meeting minutes, the minutes of February 21, 24. Any of you, all of you have got copies of those minutes. Is there any additions, corrections, deletions, whatever, for the minutes of that meeting of February 21, 2024? Hearing none, we'll assume the question has been moved. All in favor of accepting the minutes of the meeting of February 21, 2024, please signify by saying aye.
Aye.
I need a motion, Jim.
Oh, excuse me. We'll need a motion.
I'll move it.
Nick?
Motion by Nate,
I'll second it.
second by Nate. All in favor signify by saying aye.
Aye.
Okay. Committee reports. Any committee reports?
Yeah, so I know for the governance committee, we had a meeting yesterday and just went over a couple topics. One being that it seems that we're having a little bit of difficulty confirming attendance and quorums at meetings and getting back to Maria to let her know who will be attending and where they'll be attending. So if that's something maybe that we could work on as a group, I think that would make everyone's life a little bit easier. Second thing we discussed was the possibility about proposing, holding meetings in June and July at the Paul Smith College like we did last year to get everybody in person in the same building for a couple months, if that works for everybody. And then thirdly, to see if the board likes the current meeting schedule, or if if it's better for everybody to move it to a different day, different time of the day, just open to the possibilities of that to make attendance a little bit easier.
So how are we going to resolve that part, Nate? Any suggestions yet?
No,
Suggestions,
just something for
yeah.
everybody to think about.
Oh, okay.
Yeah.
Got it. Thank you.
Yeah.
Thanks for your report. Let's go on to audit and finance. Any reports there other than what we just got finished with?
Yeah, basically audit and finance met yesterday to review the audit. I think we're going to always be pressed for time just because of the limited nature which we have to get everything here and done before things have to be submitted to ABO. It's been, I guess, past practice that we've had Pam and Mike present in the past. I certainly could present the audits myself. I guess I'm looking for feedback. It just seemed like it was great to have them, great to go over some of this stuff, probably in more detail maybe than we needed to. I certainly could highlight things quicker and get through the presentation of the audits quicker if that's something people want to discuss at a later date. But the audit and finance did review the audits yesterday and we're comfortable with everything with the draft. And so any feedback that you want to shoot our way, I'll share with the audit and finance committee in regards to the audit presentation.
Very good. Can we shoot for next month, Paul, to get a solution? Or is that for audit and finance for the audit?
As far as how we want to approach it next year?
Yeah.
Yeah, we could do that.
I'd be comfortable with Paul doing a brief overview, and maybe we have one of the accountants just on standby to answer questions if possible. But we've got all the information, and the committee should have a lot of that information beforehand for review. But there's probably different ways that we could do it to just expedite it.
Well, I think as long as
get into the weeds with all the minutia. But.
Yeah.
Especially, I think, Nick, if we had, the only time that I think we necessarily have to get into anything deep is if there's some kind of an item that has to be reviewed, some kind of a finding that they had. But other than that, I agree with you. I think the quicker or the more substantial we can become in our review, the better off we're going to be.
Yeah, if there was a finding of some kind or a going concern, it should have been resolved by the time we got to this meeting anyway. There should be a solution into the next year for the future. So.
Yeah. Very good. Thank you for the suggestion. Loan committee? Nothing from the loan committee?
Yeah, I keep thinking we're IDA, but we're EDC right now. So, yes, it's been presented with the OWD. They had a 3-year interest-only loan. Balloon payments coming up next month. We had a conversation, Jeremy and I, with them in regards to they're delayed initially because grant funding, I believe it was, Jeremy, was delayed. The grant's been secured. Obviously, that threw them off their construction schedule, their bid schedule. So they're getting a later start than they had hoped. So they were looking for an extension of the existing loan. They also have a loan with another banking entity in Tupper Lake, in which they have extended the loan themselves for their portion. We would be going out 12 months. The interest rate is in line with our loan policy. It's prime plus 1, which is 9.5%, but it was offset by 4 separate 0.25% credits. Some of them are related to downtown revitalization areas, blight, and I can't remember the other 2. So the interest rate would be 8.5%, which is double from what they are currently paying. We see no issues in granting them the extension. And it's our recommendation.
Yep. Thank you, Paul. I notice we have had some information in the Tupper Lake Free Press that they expect, supposedly. The expectation is that next month they'll begin doing contracts and RFPs and what have you. So that'll be good. Thank you. Any questions? Okay, we'll go to the treasurer's report now.
All right, that's just.
Treasurer's report?
Oh, I'm sorry. Nothing to really report at this time. I'm waiting. I think next month's financials will be more meaningful because I'll be getting the any adjusting entries from the auditor in relation to the audit findings, and next month I'll have more to say on the treasurer's report and the financials.
Very good. Any questions, board members? If not, we have a motion to accept the treasurer's report for this month.
So moved.
By Clyde, second.
Second.
Second by Nick. Any further discussion? There being none, we will, the questions have been moved. All in favor of accepting the treasurer's report for this month, please signify by saying aye.
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 Opposed, nay? Guys have it. CEO report, Jeremy, or do you want to?
Yeah, I'll just be brief. I don't know if everyone has this in front of you. I'm not going to go through it in detail, but we've got two documents that I've shared with everybody. First is our 2023 report. So as you know, we have to report out on a whole bunch of statistics each year to the authority's budget office. And as part of that submission, we have to make a report on our operations and accomplishments. And so that's the bare minimum, but we've over the years been growing, like improving what we share as far as an annual report, which is pretty customary for corporations. So presented to you today is our annual report that gives a good highlight of a lot of the major accomplishments throughout the year, and will also be what we submit to the state. And I won't go through all these, but you probably recognize this if you've been around. We divide up our accomplishments based on our 4 overarching goals: strong economic development climate, vibrant entrepreneurial culture, our flourishing downtowns goal, and our resilient industries goals. So as you read through, for the most part, there's nothing really, it shouldn't be surprising, because we as a group, staff and board have done a lot. And the purpose of this report is to just capture all that and help remind ourselves how much good work we did. And then it's a great opportunity for us to share this out as well. So my report on that end is thank you to everybody, board and staff, for all the work we did last year, for Kelly for helping me put this report together. And if you have any questions, please reach out, but this will go up on our website and be submitted. The link is submitted to the authority's budget office to fill that requirement.
Very
and
good.
Then really quickly, I'll also share, you also have in front of you, or should have in front of you, our 2024 report plan. And you've seen some of the proposed goals and priority actions over the last couple of months, but this is just kind of putting it all together in a more formalized plan. And this is also something that we upload on our website and share with the authority budget office. And again, we break these up by our different goals. And we have goals, objectives, and action items. And then these goals and action items turn into our quarterly objectives that we work on as a staff each quarter. So again, shouldn't be too many surprises here because we've talked about a lot of this already, but just wanted to share the formal version of it so you can see what we will be uploading to our website. If there's any questions, or does anybody have any questions? If not, that's my report.
No, but I do have, want to thank you and the staff for a physically pleasing document. And secondly, I'd like to suggest to our board and our staff that if your arm can reach back far enough, pat yourself on the back. Good job. Thank you. Old business. Any old business? There being none, we'll move on to new business. Number of items here. But before we get into that, I want to welcome Justice Martin here, former member of our board, and now he ascended into the county boardroom and has not been heard from since, but we're glad to have you. Anyway, thanks, Justice. Good to see you. And welcome again. Continue to welcome our new members, Nick and Melissa. Okay, let's go on. Annual report, 2024 plan. I think we've already done that, correct? Yep. Okay. Then we'll move on to resolution 2024-08, accept the fiscal year 23 audit and annual report for the EDC. We'll accept the other two pieces as we get into those meetings. But this resolution, I believe, should cover only the EDC portion of the audit. Did I have a motion to that effect?
I'll make the motion.
Motion by Nick. Second.
Nate and Nick.
Nate. Thank you. Anything to quickly do a rundown on there? Okay. As you know, we are all authorized, or there are people authorized to be backups for our accepted check signers. So that being the case,
take the vote on.
I'm going to.
On 06.
On which one?
On 06.
Got it.
Got it. Motion second.
Okay, sorry.
For the vote.
Motion and second for the audit resolution 2024-06. I think we'll do a roll call vote on this.
Okay, Sherry Boye is absent. James Ellis.
Yes.
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabideau.
Yes.
Nick Russell.
Yes.
It's adopted.
Thank you. Appreciate any direction you people can keep me from doing some crazy things here with all this stuff today. Now we go to resolution 2024-07, signature authorizations, which we described a moment ago. Any further discussion? And we do have a motion and a second on that one, don't we?
No, we do need a motion.
We need a motion and a second.
So moved.
I'll make the motion.
Second,
Clyde, Nate. Clyde, Nate.
and Nate.
Nick, let's keep this rolling.
There being any further discussion? There being none, go ahead and call the roll. Maria.
You want to make a change to it? This is the authorization, signature authorization.
Yeah, we talked about it yesterday and you're talking about taking the names off the resolution and just putting CEO and CFO so that if there are personnel changes in the future, the resolution stands no matter who's in the position. Prior document named
Names.
Yeah, named names, and I don't think that's necessary. So then you've got a resolution that's good into the future if there are changes at the top.
So the proposed change is simply to remove Jeremy's name and my name from the resolution and just do this by position.
Very good.
I second the amendment.
Okay. So all in favor of the amendment
We have to do the amendment first.
Because Nick would make the motion, Clyde seconded for the amendment, so we need to vote on that.
That's what I was gonna say. We have to vote on the amendment first. So this first vote will be on the amendment only. Go ahead, Maria, call the roll on the amendment.
So this is for the amendment. Sherry Boye is absent. James Ellis.
Yes.
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabideau.
Yes.
Nick Russell.
Yes.
So the amendment is adopted.
With the amendment being adopted, we'll now accept a motion to approve the resolution.
We already have the motions for that.
No,
Yeah.
no, we just amended the resolution,
Okay, so
as I understand Robert's rules.
you know,
Now we're voting on an amended resolution.
Okay, you need a new motion.
Yes.
In second?
Yes.
Okay.
So
We have
Nick
a
and
motion
Nate.
on the amended resolution. Motion to accept the resolution as amended by Nick, second.
Dave
Melissa.
Melissa. Or Nick Melissa.
Now we'll have a vote on the amended resolution as just amended. Maria, go ahead and call the roll.
Sherry Boye is absent. James Ellis.
Yes.
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabideau.
Yes.
Nick Russell.
Yes.
Adopted.
Thank you.
Matching up with this one, is this a good time to do the assistant appointment?
No, let me leave that to the end.
Okay.
Yeah.
Okay.
We have another item to take care of at the end with all these moving pieces. See you, Justice. We'll now consider resolution 2024-08, authorizing subsidiary agreement with the town of Harrietstown. Can I have a motion?
So moved.
Clyde moves. Second.
Nate.
Second, Nate. Any discussion there, Jeremy?
I've updated the board on these this exciting opportunity with the town of Harrietstown, Tupper Lake. This is an agreement that would formalize the relationship between ourselves and the town of Harrietstown. And the best way to describe this is that they would be turning over management and administration of the grant to us. They would be the applicant and recipient of the grant, and then with this agreement, they turn it all over to us to administer. It's set up just like we have done previously with the county for the CARES Act and the previous micro enterprise grant. And the purpose of this grant program would to seek micro enterprise grant funds to support businesses that want to leverage the new rail trail that goes through Harrietstown and Tupper Lake. Rachel, did I miss anything? Rachel's here in case anybody has any specific questions.
Okay.
I think that's good, other than just adding that having this executed subrecipient agreement is something that will bolster the application, which is why we want to have it done before submitting the final application.
Very good. Thank you, Rachel. Any further discussion? There being none, we'll assume that we're ready to vote on resolution 2024-08, authorizing a subrecipient agreement with the town of Harrietstown. Go ahead, Maria, and call the roll.
Sherry Boye is absent. James Ellis.
Yes.
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabideau.
Yes.
Nick Russell.
Yes.
Duly adopted.
We now move on to resolution 2024-09, authorizing a subrecipient agreement with the town of Tupper Lake. Could I have a motion to that effect?
So moved.
Moved by Clyde, second.
Nick.
Second, Nick. Is there any further discussion on resolution 2024-09, authorizing subrecipient agreement with the town of Tupper Lake?
Yeah.
Basically the same items as we discussed in 08.
Yeah.
There being none, we'll assume that the motion has been moved. Maria, go ahead and call the roll.
Sherry Boye is absent. James Ellis.
Yes,
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabidou.
Yes.
Nick Russell.
Yes.
Adopted.
thank you. Resolution 2024-10, authorizing submission of an economic administration grant application. Jeremy?
This is another, we've been working on this for a while. We updated the board. We wanted to submit the grant and not wait for the board meeting. However, we received good guidance from our program rep. It doesn't explicitly call for letters of support in the application process.
Good.
But our representative at EDA suggested that we get letters of support. So we're pretty much ready to go. We plan to submit already, but with that, it takes a couple of weeks to get letters of support. So we're waiting for that to be submitted, but we need authorization to do it and execute all agreements if we are successful. We should know within, Rachel, what did he say the timeline is? Was it 3 to 6 months or something like that?
He said in general it's 3 to 6 months, but for non-construction projects, it's closer to 3 to 4 months.
Very good.
This has been a good exercise, like I mentioned in the email, for us all to learn some of the tricks of the trade for applying for federal grants, which is something that we've not done in the past and what we want to do more of. So this has been a good learning experience for everybody.
Good, thank you. Very positive. Any further discussion? We'll assume resolution 2024-10 authorizing submission of the EDA grant application has been moved. Go ahead, Maria, and call the roll.
It has not been moved.
Motion.
Oh, sorry.
Second.
Thank you for keeping me straight, guys.
No, I missed it.
No, you're good.
Okay, Sherry Boye is absent. James Ellis.
Here,
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabidou.
Yes.
Nick Russell.
Yes.
Adopted.
thank you. Now, resolution 2024-11, amendment to the OWD loan agreement. I think that was discussed. Paul pointed it out. It's a question of matching up timelines with their proposal. So can we have a motion to put resolution 2024-11, the amendment to the OWD loan agreement, on the floor?
I'll make a motion.
Melissa.
Second?
I'll second it.
Nate.
Clyde?
Clyde.
Doesn't matter.
Okay. As long as you're okay with it, Maria, will go on from here.
Okay, Sherry Boye is absent. James Ellis.
Yes.
Archie McKee is absent. Melissa Mills.
Yes.
Nate Manette.
Yes.
Clyde Rabidou.
Yes.
Nick Russell.
Yes.
Duly adopted.
Thank you, Maria. Appreciate you coming in with your illness. Thank you. It's a good thing you're here. Keep me from going awry here. Executive session, is there a need for one? There is no need for an executive session. We'll move on to public comment, number 11.
And assistant treasurer.
Now, one other item before we leave the EDA, the EDC meeting. We have to appoint an assistant treasurer for the EDC.
Because we didn't have enough, all of the board members
We got-
not to have Matt McCardle join.
So we
Gathered that, yeah.
we just kind of motion from the floor to do that.
Yeah.
I think we all yesterday nominated, or he volunteered. I think Nick volunteered to be the assistant treasurer.
Yes, we did.
That's right, it was an audit and finance.
Well,
So,
a report, a subsequent report from the Audit Finance Committee says Nick Russell has volunteered for the position of Assistant Treasurer for the EDC.
Wait a minute.
In case, could we have a motion to that effect?
The next thing is it
I
doesn't
motion.
come with any responsibility.
Motion by Melissa, second.
Nate
I'll
and
second it.
Russ.
Nate, assuming we don't have any further nominations, we'll go ahead and vote. All those in favor of Dick Russell becoming assistant treasurer, please signify by saying aye. God bless you.
Aye.
Aye.
Opposed, nay. The ayes have it. We're now ready for adjournment, and the date of the next meeting is indicated as April 10, 2024. We have a motion to adjourn this part of the meeting.
I'll make the motion.
Motion by Nate,
I'll
second. Second,
Right
Nick.
now,
All in favor of adjournment,